This episode of Money Talks, Make Money Work For You. I'm HJG White from eToro. This episode we're going to be talking about the latest financial results from Alibaba. So they just published their financial results a couple of days ago, and we've now had the chance to see how the markets reacted to it, because there's a lot of information in there. Initially it can seem quite positive, but then a detail comes out and it changes everything. So, and also it's quite hard to value Chinese companies because their financial sheets are all in Chinese yen. So the strength of the Chinese yen market and everything can affect it. That's why I personally don't like to hold more than one company that's in another currency. But that being said, I do have a position in Alibaba, and so I was particularly interested in this financial results because the price of the stock had dropped so considerably since its peak in 2020. I believe it reached about 300 and then went down well below 100. I got in mostly at 140. That's my average share price. And so I'm still in the red, but this financial results has been a positive one. And so it's brought me closer to breaking even and my ultimate goal, a profit. So let's start with where we're going to get these financial results. For the minute, most of my favorite sites, they haven't updated with the financial information that has come out in this report. Most of this information is pulled directly from Alibaba's website. I'll put a link to the financial results PDF in the description. So the first thing we're going to be talking about is the fact that everything has seen growth since the last quarter, except for two small sectors, and they haven't grown relative to the last quarter, but year to date. If you ended the financial year in March, then for the last 2 years, these things have grown. So that's a great thing to see. Basically, that's the primary concern with COVID and the shutdowns that's happening in China. Alibaba really relies on rapid growth, and so it's great to see it. One of the reasons that we're holding Alibaba, or I'm holding Alibaba, is because I believe it's deep value. But as you know, I really like a low PE ratio, and Alibaba doesn't have one. Basically, they just have enormous revenues, high operating profits, but they just so aggressively reinvest their capital that they have very little earnings. So that's why you have to take the PE ratios on companies like Baba and Amazon with a grain of salt. But to gauge its value, I've got this chart that shows where its market cap was in 2016 and where it is now. And then also its revenue, its gross profit, its operating profit, its cash, its free cash flow, and the amount it invests. And from this you can see just how much the business has grown in earnings since 2016. But not in price. It has grown a tiny amount in price. So it's grown 14% in price, and it has grown 900% in revenue, 500% in gross profit. So that's the main one. Really, for me, the most important statistic for a company like Baba and Amazon is gross profit on the top line numbers, but free cash flow growth and everything is really important to see as well, and I like to see that, but you won't be seeing that at the minute because of all the hardships that Alibaba is going through. And again, we'll get into later. They've got a lot more cash, and they're investing a hell of a lot more than they used to. So they're growing the business. I much prefer this business deep value to a company like Facebook, because everything that Alibaba is investing in is things that it knows will help increase operating profits and will increase the revenue. Whereas who knows what Meta is going to do? You kind of can only value Facebook on their revenue business from Facebook, Instagram, WhatsApp. Next is the declining margins. So this is a really important thing to look at, because this is the principal argument against this business, is that the operating margins and profit margins have been declining since 2016. And this is very true. Alibaba, when they set up, they were relying on third parties for their delivery. They would handle the logistics but for their e-commerce, they would rely heavily on third parties. Whereas Amazon has had far lower operating profits compared to Alibaba for almost the entirety of its existence. Look at this figure here. It has been underneath 5%. It's been around 5% in the last few years, and that's way up from where it was from the 0 to 5% that it's been the few years before that. And so operating profits are great. Alibaba has had them because they have been operating the high margin aspect of the business, which is just the website sales and financial. Now they're going into e-commerce, so you can expect them to get much bigger revenues over time, but that will have a consequence with the fact that it will chip away at their operating profits, because they'll have to spend money on things like delivery vehicles and getting the main thing, the most expensive thing in Amazon's instance, is the last mile, getting it to the door of the customer. That's the most expensive part of the product, and that's something that Alibaba has never had to do before. And they are working on some really interesting solutions to getting it to the door. And because they are so cozy with the government in China, it's likely that their last mile will be far more cost effective than Amazon's when they get round to it. But they're in the capital aspect of it. They're spending money on the infrastructure right now, and they don't have the actual revenue bits set up yet, because they're setting it up now. And so finally, why do we love this business? So all the numbers that you want to see that represent growth are there, and you can see from this revenue, gross profit and operating income how steadily this business has been growing over since 2016 to now. Arguably though, you can see that the operating profit has stayed relatively low. Again, they just aggressively reinvest, and you can see that in its revenue. What's nice to see is the gross profit from the business, from each individual sector, is growing nicely. Also, Alibaba are getting into electric cars, so just like Amazon are, but they haven't enormously blown up their budget on it. So yeah, things are going very well for Alibaba. It's pushed them up a little bit, but it's not hard to see that one sector, one quarter, where they are in a positive free cash flow, this stock could potentially bounce back to fair value, and maybe to optimistic value, which would be brilliant. Also, something that they've done, one of the reasons that this, one thing to note is they were in a negative free cash flow this year, but I don't consider that an issue because they've been doing so much share buybacks. So they've just been using their enormous cash pile to purchase a large amount of their shares back, which will, in the long run, increase. It has already increased the earnings per share, but in the long run, it will mean that when demand goes back up for the stock, there'll be a limited supply. So it should mean that the upward traction on this stock is pretty swift when it comes about. But that being said, for you to believe in this stock the way I do, I think you really have to have a lack of fear, I'd say. I don't have a belief in the Chinese government. I think there's a negative sentiment towards business in all political spheres at the minute. We've got the UK government talking about a windfall tax on oil companies. Every government is to some degree anti-business, and I don't think the Chinese government has done anything drastically different from what a UK government would do, or a US government. It would just we have a more polarized media and anti-Chinese sentiment over here, and the benefit for value investors is, if you push through this sentiment, is I think you can find undervalued stocks. But I'm young and maybe haven't been burnt by China yet, so we'll see. Unless you count the fact that my shares in Alibaba went down 40%. but since I still have the shares and I still believe in the stock, I don't consider myself burned. So we'll see how this goes. Looking forward to the next quarter. I think it's going to be a pretty bearish market now. I think it's jumped up all it's going to jump until the next quarter. We get some good news about Shanghai lockdowns and stuff like that, because this quarter has been a tough one as well. So this isn't going to be the golden quarter for Alibaba. That'll probably be the next one. So I hope you enjoyed this video and this analysis and the charts that I put on the screen on the side here. And please leave any questions in the comments in the description, and have a great day. Thank you very much.